Wednesday, April 15th, 2020, MONERO 64, home of alternative economics and contrarian views. So when you've got the mainstream media actually coming out and saying things like Britain faces biggest economic shock in 300 years, that's the Telegraph. When you've got the FT saying the world economy is now collapsing, that's Martin Wolf of the FT. When you've got the FT also saying world economy set for heaviest blow since Great Depression. Yeah, when you see this, you can bet it's a lot worse. And why do I say that? Well, because the mainstream media, mainstream economists, the central bankers, politicians, they're always trying to sugarcoat things. I'm not trying to be negative. I think it's going to be even worse. And why do I say that? Well, because we've had an orgy of debt creation and inflation since the early 70s. And the response to this crisis now has been an even more accelerated creation of debt and funny money out of thin air by the central banks, by the governments. It's like they're in this paradigm where they think debt is the solution to everything. I would have thought maybe after this crisis started that they would have thought, well, wait a second, maybe we shouldn't take more debt. Maybe we should let the economy implode. Maybe we should let companies that shouldn't be in business collapse. Maybe we should let everything cleanse. Yes, help the population of the countries, give them emergency aid, but don't come out and help Wall Street. Don't come out and save hedge funds. I saw a headline yesterday, an article that hedge funds are quietly tapping these programs that have come out in the US to help small businesses and medium-sized businesses. I'm sorry, that's a joke. I worked in the market for almost 30 years. I know what hedge funds are. They're speculators risking their capital, and for them to claim help because of this emergency or this crisis is quite outrageous. So what am I trying to say here? Well, I think people need to think of themselves individually. For example, right now, you're in lockdown, wherever you may be. You might not be in lockdown. I'm not sure what countries are not under lockdown right now. But would you start taking on a lot of debt, knowing that we're not sure when we're going to go off this lockdown, how long more it's going to take? Would you go out and buy a new car and borrow money to do that? Would you go out and buy a new house and borrow money to do that? No, you just sit tight and you watch what happens. You wait for the end of the crisis. We don't know how long it's going to be. And then you contemplate what you're going to do. This is why I think it's going to be a lot worse than the mainstream is telling us. They don't even use the word depression, even though they mentioned the Great Depression here in one of the articles. They say it's just going to be a severe recession. A lot of the forecasts from the IMF, yeah, they see a contraction this year for the advanced economies in GDP, but then they somehow see a recovery and growth next year. Yeah, and granted, they do have more pessimistic scenarios, but yeah, you can't solve a problem of debt with more debt. Of course, they're blaming the crisis and that C disease for everything. It's just the trigger or the catalyst. It's just a snowflake that Jim Rickards talks about in his books. It's the complexity, and and in a system that has been so complex with all the globalization, all the global supply chain intricacies, the just-in-time inventories, the debt that is necessary to, how can I say, keep the system going. And you can see signs in the real world how leveraged this system is. And what are those signs? Well, one of the signs that I think really shows how leveraged the system is big companies like Primark, let's say in the UK, big shopping department, or other big retailers. They're actually saying that they're going to stop paying rent, or they're going to cut their rents. I saw Tesla yesterday. They sent a letter to their landlords and said, this is how much we're going to pay now. We're going to cut how much we pay to you. That's very arrogant. Of course, they know that the landlord is in a bind, that no one else is going to come and rent from them. But what it shows is that we all think these big companies are very well run, that they've got their financial house in order. But why are they renting? Why don't they have their own infrastructure, their own buildings? That shows you that they're binging on debt, and that's the way the system has been. And now we have the governments coming out and leading by a bad example, I would say, by increasing the debt even more. I saw, just before I started the video, there's a message from one of my viewers, and there's a video out, I think it was yesterday, Paul Craig Roberts, interviewed by Greg Hunter. And Paul Craig Roberts apparently said, we need debt jubilee or system collapses. I haven't listened to the interview, and I would say that title is a little bit of an oxymoron, because a debt jubilee would be a collapse, because we know that the monetary system nowadays is based on debt. So if we wipe out the debt, which is what a debt jubilee is, we will have a collapse. So I think what he's trying to say is that the more and more we increase the debt, it will lead to collapse, and I agree with him. And the only question now is whether it will be, well, a collapse would be deflationary, of course, because you wipe out money. But will they come back after the collapse and try to reinflate it with even more funny money? And that's when you get the hyperinflation. And I think, well, I have a feeling that's what they're doing, the latter, the hyperinflationary one, because I think the collapse is happening right now, and that's what they're doing. They're monetizing the debt that they're creating. And if you read about Weimar Germany, Zimbabwe, Venezuela, the hyperinflation always happens when there's too much debt in the system, the economy contracts, and they feel the necessity, the powers that be, to increase more, even more and more the debt, to print the money. And then eventually the economy doesn't come back, because you can't add more debt to a system that's imploding. And then the people lose confidence in the currency, and that's what hyperinflation is. Even if we don't get that, if we just get the collapse and they let the deflation work out, you need to have precious metals to protect yourself financially. And I'm not talking about other aspects of life. And I'm not here to help other people with that. I can try to give some, how can I say, ideas of what I think, but there's a lot of other people out there who talk about these things, like prepping or the spiritual side. I'm here to look more at the money. And what I can tell you is that, Mr. Roberts, we are getting a collapse no matter what. And a debt jubilee is a collapse as well. And I would say that all these mainstream headlines, yeah, they're partly right, but I think they're probably too optimistic, unfortunately, for the kind of wipeout we're going to experience. Is that a bad thing? No, I don't think so, actually. Going forward, for younger generations, and even for someone as old as I am, things will be fine. It will actually be a good thing. Do we really want to be stuck in a 30-year quagmire or economic malaise like they have been in Japan? I don't think so. But for the future, I see good things. And what are these good things? Well, less dependence on debt, more of an honest system where people actually produce and consume, of course, as well. As the Austrian School of Economics always points out, for every producer, you have a consumer, right? You have to produce to consume. And we've gone on for too long trying to just create consumers and not producers. So I think that will be positives going forward. So there you go, batten down the hatches. And I'm not being negative, I'm just trying to be realistic. So let's have a look at where the markets are this morning. It's 7:54 a.m. London time. Yesterday, gold and silver rallied quite strongly. I think gold got up to almost 1750. Yeah, the usual suspects manipulated the price of gold probably a little later in the day. And we're coming off here as well, but I wouldn't be concerned. Markets never go up in a straight line. If you had gold at $2,000 right now, you probably wouldn't be able to go out there and get some, or silver at $50. So I would say it's very fortunate that we can still get some physical gold and silver at the moment. And I know that it's not easy to get both, because there are shortages in the retail market, the bullion dealers, especially here in the UK and other places like the US as well. I know there are some places where you can get it easily. And you will find that the prices are a lot higher than the prices we see on the screen, of course. It's called the premium, but I would say it's more the real price of the physical metal. Because we know the LBMA and COMEX, those are like fraudulent institutions. They don't really trade gold. They trade a representation of gold. It's not real gold. It's fractional reserved gold. It's just a symptom of the rotten fiat currency system. That's all it is. So right now, the price of gold in dollars is at $17.12, down about $16. Range has been $17.33 to $17.10. Silver is down 30 cents at $15.44. The Dow, yeah, I still find it amazing that we're able to recover as much as we have in the Dow, but I think it was oversold. And if you notice where we went yesterday and where we closed, it was just around that 24,000 level, which is roughly 50% retracement from the low we saw, I think, March 23rd. So right now, the Dow futures down 109, 0.5% lower, 23,840. S&P, same, down 0.5%. NASDAQ 100 future down 1/3. The dollar got hit hard yesterday. And again, I don't want to focus too much on the fiat currencies, the dollar, nor the euro or the pound. You don't want to be in those. Not even if you think the dollar milkshake theory will take effect and that you have to be long dollars. It's the completely wrong thing to do. In a system that is imploding, in a debt-based system, you don't want to have debt-based currencies. So you want to stick to the precious metals. Be as it may, yeah, the pound is losing some ground today. It's been very strong in the last 2 weeks since the Fed bailed out the pound. And why do I say that? Well, they opened swap lines to the Bank of England. They allowed the Bank of England to do repos to save the pound. Pound was quickly going towards 1-to-1, and it's rebounded 10 big figures. Right now we're at 125.75, down 1/3%. Euro is down 0.2, 109.59. Yeah, and I'm not too sure the euro is going to be the only currency that's going to collapse, that the only currency that is doomed. It's all of them. Dollar is unchanged against the yen, around 107, and the crude oil price, WTI, is down almost 2/3% at 26. I saw yesterday a headline, I think it was to do with Saudi Arabia, that they're like lowering their prices. Yeah, they're cutting the supply to try to help the oil price, but they're also lowering their prices. So they're quite clever. They agreed with Trump. They played ball, and the Russians as well. But they'll probably be also lowering their prices. They didn't see that, did they? So there you go. Bond market, if you can call it a market, of course. The 10-year yield is at 0.72%. And I think going forward, that will be the key. When interest rates for the government bond market start going up, or the yields start going up, then you will know that the hyperinflation is beginning. For now, they are under control, of course, of the central banks. But when investors start selling even government bonds because they need to liquidate, those yields are going to go through the roof. And that's when all hell will break loose, in my opinion. So there you go. I know it's not a happy, positive message, but it's a realistic message. If you enjoyed the video, please hit the like button. Please share it far and wide. Think about subscribing to my channel if you haven't yet. And you can also follow me on Twitter, Facebook, BitChute, Steemit, and DTube. I wish you all a great day. Take care. Bye.